Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about the third quarter earnings results for Nvidia. And as we can see, this stock is down 50% in the same year that the S&P 500 is down about 13%. And so they are underperforming the market at the moment, but we're going to see if based on that, the stock could potentially be trading at a good buying opportunity at this current share price. And so before we get into that, I just want to look at this article that points out an up-and-coming catalyst that took place with Nvidia, basically partnering with Microsoft and another company to try to integrate their hardware into some of the other up-and-coming software developments that are happening with other big tech companies. And to be more specific, as we can see right here in this paragraph, they talk about how Nvidia did a partnership with Microsoft's cloud computing segment, Azure, to build a new supercomputer. And so basically Microsoft is the first public cloud business to adopt Nvidia's full AI advanced stack to help integrate Nvidia's hardware and software into Microsoft's supercomputer. And obviously this is a pretty big deal because there's a lot of competition in this space. For example, between Nvidia, AMD, and Intel. As you can see right here in the article, they talk about how there are other data center companies that are trying to race to the public cloud market. And since this market is still developing, obviously the first movers into this market are going to be the ones who reap the biggest rewards. And we can also see right here that not only did Nvidia partner with Microsoft, but they also partnered with Oracle, Oracle being another public cloud infrastructure and platform service, and they're trying to catch up with other big names in cloud computing like Microsoft's Azure, Amazon's Web Services, and Alphabet's Google Cloud. So it's basically a race right now to see who can basically attain as much market share as possible in the cloud computing market. A lot of the biggest tech companies are competing for the cloud market, and then some of the smaller companies like Nvidia, AMD, and Intel are trying to be the first movers to provide the chips and the hardware to integrate into these supercomputers that a lot of these big tech companies are investing billions of dollars into. And so right here we can see their income statement for the third quarter of 2022 compared to 2021. And year over year, their revenue is down 17% from about $7.1 billion to $5.9 billion. So it hasn't been that good of a year for Nvidia's revenue. But that being said, even though their total revenues are down about 17%, of this $5.9 billion, about $3.83 billion of it was data center revenue, which is important because that's the revenue that matters in relation to this partnership with Microsoft. And that revenue, their data center revenue, is up 31% year over year. So even though their total revenues are down by about 17%, their data center revenue is up about 31% year over year. And we can see their net income is down quite a bit from $2.4 billion to only $680 million. So that's a decrease of 72% year over year for Nvidia's bottom line. So definitely hasn't been that good of a year for them in terms of earnings growth. And so right here we can see their balance sheet for January 30th, 2022 and October 30th, 2022. And we can see that during that time period, total assets have decreased by about $4 billion. And we can also see that their total liabilities have increased by about $2 billion, with total shareholders' equity decreasing by about $5 billion. Retained earnings got pretty much almost sliced in half from $16.2 billion to a little over $9 billion. So not a good sign to see that retained earnings is decreasing like that, because obviously if a company doesn't have that much in the way of retained earnings, it's difficult for them to continue to invest in their company and grow their company. And for Nvidia, that's a pretty big deal because they are competing in the tech industry. And so research and development costs, as well as keeping up with the demand for their products from consumers, as well as from the big tech companies that are building these quantum computers, is pretty important. So they want to make sure they have enough capital to invest in those ventures. And then lastly, on page 8, we can see their cash flow statement for the 9 months ended October 30th, 2022 and October 31st, 2021. Over that time period, their net cash provided by operating activities has decreased from about $6 billion to $3.3 billion. And we can also see in their financing activities that they've repurchased way more common stock in 2022 compared to 2021. In 2021, they didn't repurchase any common stock, but in 2022, they repurchased $8.8 billion so far. And of this, about $3.75 billion was returned to shareholders in the third quarter through share repurchases as well as through dividends, as we can see right here. $300 million worth of dividends paid out in the first 9 months of their fiscal year. So they are trying to return a little bit of value back to shareholders, but obviously it hasn't really led to that great of an impact because, as we saw from their balance sheet, their total stockholders' equity has actually decreased with their additional paid-in capital increasing. And so that obviously leads to a dilution for previous shareholders, because if they're issuing new partners to raise capital to finance their company, then that's going to decrease the share price for their stock over the long term. And so right here we can see this discounted cash flow model to figure out the intrinsic value per share for Nvidia. Yahoo Finance is estimating that this company is going to grow at about 21% over the next 5 years. They had about $8 billion worth of free cash flow in 2021, with about a little over $1 billion in cash sitting on their balance sheet after subtracting debt. And they have a little over 2 billion shares outstanding, which puts their intrinsic value per share at about $84 per share, meaning that Nvidia is currently still trading above their intrinsic value per share, since they're trading at $162 per share. So that means they might not be presenting a strong buying opportunity right now based on these projected growth rates for their company. Also on the right hand side here, I did a competitor analysis comparing them to their competitors in this industry, Intel and AMD. And we can see from a financial ratio perspective that Nvidia is pretty dominant. They're pretty competitive in this industry. They have the highest profit margins at 64 gross and 36 net, compared to Intel's only 25 net and AMD's 19% net profit margin. AMD does have the highest return on assets, but Nvidia is pretty competitive, considering that they're only about 2 to 3% behind in terms of a return on assets. So from a financial ratio perspective, it looks like Nvidia would probably be the buy in relation to their competitors. But then obviously from an intrinsic value standpoint, they are currently still trading above their estimated intrinsic value per share of $84 per share, currently trading at 162. So not really sure what to think of Nvidia at the moment. The up and coming catalysts for their partnerships with Microsoft and Oracle, and seeing how that ties into their future growth rate for their company, is definitely interesting and something to keep my eye on. But as of right now, for me personally, I probably wouldn't be buying into it at this share price, but I'd love to know what you guys think about Nvidia and about their stock and their current share price. Is it a buying opportunity right now? Let me know what you think in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.